Welcome to Veranda CA. In today's session, we are going to see so many miscellaneous chapters. So, primarily we will be covering salaries and miscellaneous provisions. If you ask me whether salary is part of these rest of these chapters, for final, so it is always a case where there questions from salaries is probably not at all asked. So, we can keep it that manner or rarely asked. So, we will just be covering only the basics of salary because it is not important for the finals because it is extensively covered in the intermediate itself. So, we will start with this concept of miscellaneous provisions. So, there is this chapter called miscellaneous provisions. So, typically when you say the word miscellaneous, it is something like it has not been covered in rest of the chapters. But whatever we are going to cover is relevant to PGBP. So, when you say PGBP, it is your profit and gains and business provision, right. So, these provisions are in a manner related to PGBP only. So, whatever we are going to discuss here, it is part of what would have been extensively covered in your 44AB, that is whenever tax audit is undertaken, there are certain things that must be confirmed by the auditor. So, we are going to see some of the provisions in this particular slide which is relevant for tax audit. So, whenever 44AB tax audit is conducted, these are key relevant areas which needs to be considered at the time of audit. So, what is the first one? It is about section 269 SS. So, what is 269 SS? So, this 269 series is about we can say that it is about the electronic mode of payments. That is, they say certain payments or certain receipts must be in electronic mode. So, that is what is being recommended here. So, the first one that we are going to discuss is 269 SS, where we say whenever there is an loan, that is loan or deposits, that is taken or accepted. So, you might either take a loan or accept deposits. Such loan or deposits, if you actually see there are three words, one is loan, deposit, and the third is specified sum. And such transaction, that is whatever is being taken or accepted, that is your loan, deposits or specified sum, it must be through prescribed electronic modes. What are the prescribed electronic modes? You have RTGS, NEFT, then you have account payee check, whatever we used to see in 40A3. So, there is nothing new that probably I will have to add on, but I will just repeat it. And then these days you have UPI, you have credit card and all those things, right. So, these are the things that are eligible. So, when you say electronic modes, let us ignore UPI for 269 SS and other sections here. So, it is credit card, debit card, net banking. So, all these is what is called as an electronic mode of payments. So, now in this electronic mode of payments, you are supposed to take a loan or accept a deposit or accept a specified sum only through this prescribed electronic modes if the amount is greater than or equal to 20,000. So, any amount 20,000 or above. So, should be only through this prescribed electronic mode. So, what do you mean by this term specified sum? We said the loan, deposits, probably when you say loan, it is a borrowing, right. When you say deposits, what you accept some as deposits, let us say companies accept deposits and all those things. So, such deposits. The word specified sum here refers to any transaction for transfer of immovable property. So, when you say specified sum, it is toward immovable property. So, whenever there is a transfer of immovable property, whatever transfer that we are undertaking here, the immovable property, amount against such transfer should be taken or accepted only through electronic prescribed modes. So, when the payment is more than to 20,000, that is 20,000 or more. So, what if it is not happening? So, what if it is not happening, that if in case if you have actually received it in cash, let us say there is a transaction of 2 lakhs that is received in cash. So, that particular amount, whatever amount it is, it shall be disallowed, it shall be the equal amount, whatever is actually not in the manner that has been prescribed here. If there is such transaction, then the entire transaction that is 100% of that amount will be treated as a disallowance, will not be allowed in the computation. So, that is what is there. So, the equal amount will be charged to tax. So, now if this is not being followed, that is there is a transaction, let us say of 2 lakhs which is not in accordance with section 269 SS, which means it is through modes other than the prescribed modes. So, now there can also be a penalty on this. So, penalty can also be levied in 271D In the earlier session, we had already discussed about this penalty, where we said 100% of such tax can be levied as penalty. So, whatever the amount that is being accepted above 20,000 by a mode other than the mode prescribed in 269S, such amount will not be allowed, and tax equivalent to that can also be levied as a penalty under 271D. So, that is 269SS. Then you have 269ST, next section. Here it is about receiving. So, what they say is, whenever there is a receipt, an amount through it must only be through this prescribed mode, that is your credit card, debit card, net banking, only through those prescribed modes. On what circumstances? From a person in a day. So, it is from a person in a day. It could be multiple times from the same person. So, what they use, the word they used is aggregate. So, aggregate from a person in a day, and then you have in respect of a single transaction, that is in one transaction, it does not matter to whom you are paying or something, in one single transaction more than 2 lakhs is being provided, or in respect of transaction relating to one event or occasion from a particular person. So, this is what they are referring. So, these three transactions, that is in a person, in a day, and then you have a single transaction, and then finally you have this one event or occasion from a person. So, it is, let us say for one bill you are being split, it is being split up and paid over the period. So, that could be called as one event. So, for that one event, if you are paying multiple payments where the total of such event is more than 2 lakhs, then also it is disallowed. So, what is there here also? It is the sum equal to that borrowings, that is whatever receipt we are talking about, that equivalent amount will be not allowed in the books of accounts. And penalty is also whatever is the equal sum, that is your 100% of tax on such amount shall be levied as a penalty. So, this is 269ST. The next section is a recently introduced section, like it's only couple of years that is there in place, that is 269SU. This 269SU is also about receipt, but here all these three, that is 269SS, 269ST and 269S through, are all three about receipts, right. You receive loan, that is you receive loan, that is you take or accept loans, that is you receive loan or deposit or receive specified sum by a mode other than prescribed mode. You receive an amount through a prescribed mode from in aggregate from a person in a day and in a single transaction or one event more than 2 lakhs. So, this is also a receipt. The third one, SU, is also receipt. If the turnover, that is turnover or gross receipt, whatever according to the business, if it is manufacturing, it is going to be turnover. If it is a traded goods, you are going to call it as sales. If it is going to be service, you are going to call it as gross receipt. So, depending upon the business, whatever business it is, if the total income, that is total sales, turnover or gross receipts is more than 50 crores during EP, that is immediately preceding previous year. So, if you are going to see for financial year 21-22, that is from 1st April 21 to 31st March 2022, you will have to see the sales, turnover or gross receipts of which year? The previous year, that is your previous year 2020-21. So, what is the turnover or sales or gross receipts in that relevant year? So, that is EP. So, if it is more than 50 crore in that particular year, then that organization should always the entire payment that we are talking about should only be through electronic mode facilities. That is, when I say all the income, we will have to say that facility must be provided for even UPI and QR code scanning. So, there are 3 or 4 modes specified. So, all these companies which has more than turnover of 50 crores must definitely allow payments through this QR code, your net banking and other things. So, this electronic mode of collection should be enabled for entities with more than 50 crores of what? Of sales, turnover or gross receipts of when it is EP, that is immediately preceding previous year. If it is for this period, then if it is crossing 50 crores, then this electronic mode of facility should be available in that organization, and there is a declaration which is also there in the income tax portal where they will have to go and accept it. and this 271 dB there is a penalty of 500 per day for non-compliance of this. So, if it is not being done, 5,000 per day, 500 and 5,000 per day depending upon the situation, reasons of penalty, you have these penalties levied for non-compliance of this particular section 269 SU. And the last section that we are going to see in this is 269T. So, what is 269T? These three sections, that is SS, ST and SU, so all these three sections is about receipt, right? T, 269T is about payment, is about payments what we are talking. So, what are they talking? It is about repayment of loans or deposits. So, you have obtained a loan, now you are repaying the loan. So, whatever it is being repaid should be through electronic modes, that is prescribed electronic modes, provided the amount is more than 20,000. So, for this also there is a penalty section which is covered under 271E. The whole of tax on what is being levied can be levied as penalty, that is 100%. So, 269T is about repayment. Now, whenever we are talking about this section, that is three sections alone, we will keep it in mind, this SS, ST and T. For these three sections, what happens is there are some exceptions. So, what exceptions are we talking about? We are talking about with person whom even if you have not complied, it is still okay. So, what are those persons? For SS and ST, whatever we are talking about, it is about if you are receiving money from a government or a banking institution, then it is an allowed expenditure. So, whatever you are talking about is okay if it is about government or a banking company. So, that is what we are talking about in this particular things. And as far as this receipts, additionally you also have this agri-produce. That is when an agri-produce company, agriculture producer is receiving money from a company, the agriculture produce company, where they are supposed to definitely receive only through these mode, which is could be in cash. So, in such cases we have also seen exception in 40A3 read with rule 6DD. So, where we say if it is related to agriculture produce, it is not applicable, that is disallowance is not applicable for the 10,000. Similarly, here also the receipt more than 2 lakhs is not applicable for that category of business, that is it is not applicable for agriculture produce. So, apart from your government and this banking facilities, in 269 ST you also have this exception for agri produce. So, now you also have this 269 SU, where we said it is also about receipt only, but here it is about the type of the turnover, that is if your turnover is more than 50 crores, then it is applicable. So, this is what it is about. So, these are the 4 sections where it is primarily categorized as this miscellaneous sections, where it impacts your PGBP, the profits or gains and from business or profession, and it is also part of your 44AB. In Form 3CD, there are relevant clauses to cover provisions of 269 SS, ST, SU and T. So, these are the provisions that will get covered. So, with this, those are the miscellaneous provisions. We will see few other provisions, miscellaneous provisions, to understand how the system works. So, first thing we are going to understand is called a specified financial transaction. So, it is called SFT. So, S stands for specified, F for financial and T for transaction. So, specified financial transaction. So, this is discussed in section 285BA, and also it has to be read in understood in relevance with rule 114E. So, what does it actually say? It speaks about key persons, that is we will call it as specified person. So, they have listed out specified persons like bank, portfolio managers, that is your security managers and other things. And then in some cases you have corporate and all these things. So, these specified persons whomever we are talking, has to disclose various information to the income tax department. What are those information? We will first see the information and then try to understand about who has to report what. The first is whatever purchase, either by demand draft or by a pay order. PO is for pay order. So, whatever is by demand draft or pay order, in aggregate in excess of 10 lakhs or more in a financial year. So, in one particular year, if you are making cash, payment to purchase this demand draft or pay order, then they will have to report such things. Purchase of prepaid RBI instruments. So, wherever you are buying these bonds and other things provided by the RBI, if it is more than 10 lakhs or more in a financial year, such list has to be reported. Such list has to be reported by the bank. So, that is another transaction. Cash deposits or withdrawal aggregating 50 lakhs or more in current account from one particular current account. So, in one particular current account, if there is a withdrawal of more than 50 lakhs or more in that particular financial year, then that also has to be reported. Then you have cash deposit aggregating 10 lakhs or more in any one or more accounts of a person other than current account. So, you are talking about 50 lakhs for what? Cash deposit and withdrawal. When it comes to this cash deposit of other than current account, it is 10 lakhs. So, for current account, the limit is 50 lakhs. For other than current accounts, it is 10 lakhs, that is SFT 4. And then you have 5, which is a fresh deposits. It is not renewal of deposits. In one particular year, you are freshly depositing more than 10 lakhs. And then you also have this SFT 6, where it is about credit card payment in aggregating 1 lakh or more in a financial year, or 10 lakhs or more in a financial year against credit card bill issued to a person. So, if it is in cash, if the payment is in cash, if the payment is more than 1 lakh, it has to be reported. For any other mode of payments, if it is more than 10 lakhs, that has to be reported. So, these are the 6 transactions here. And then the 7th one is any bond or debentures that is being acquired. Earlier we saw related to RBI and other things. This is any other bond which is aggregating 10 lakh or more in a year from a person. Then you have SFT 8, which is shares. Earlier we said bond or debentures, now we are sharing shares. This is also 10 lakhs or more from a person. And then you have buyback of shares. This is also 10 lakh or more other than bought from the open market. So, if the buyback of share is happening internally, which is basically, let us say, which is not happening in the open market. So, if it is in the open market, it is already tracked. So, whatever is not tracked is what is being listed here. So, it is only for listed company. So, if it is a listed company, if there is buyback of shares of aggregating more than 10 lakhs in a particular financial year other than through open market, then that also has to be reported in SFT 9. And then you have acquiring mutual funds. So, that is also covered. Again, how much? 10 lakhs. Foreign currency, if there is a receipt from a person for sale of foreign currency, again 10 lakhs. So, for this also the limit is 10 lakhs. Then any immovable property for 30 lakhs or more. So, that is also there. It need not be the purchase value alone. If the stamp value is higher, that only has to be considered. So, it is purchase or stamp value, whichever is higher. If such value exceeds 30 lakhs, either it could be purchase or it could be sales. So, both of this are covered. So, purchase or sale by any person of immovable property for 30 lakhs or more is actually covered in SFT 12. Then you have 2 more transactions. The 13 is again cash payment. If to any person, if you are paying more than 2 lakhs by cash, if you actually could link to it, if you actually see, we already saw a section where we said if you are receiving in aggregate of more than 2 lakhs, that is in 269 ST, right? We saw in 269 ST where we said if the company is actually, the organization, the person is receiving more than 2 lakhs from a person in a day, single transaction or one event from a person. If such transactions, whatever is applicable, we said penalty could be levied and the entire amount can also be disallowed. So, now this 269 ST, similar thing has to be disclosed through this annual specified financial transaction also. So, SFT 13 is to disclose such transactions. Last one is specifically for demonetization. So, between that period of demonetization, if there is aggregating of 12.5 lakhs for current accounts and 2.5 lakhs for other accounts, if there are cash deposits between this period, that is 1st April 2016 to 9th November 16, in respect of accounts that are reportable in the above clause. So, if it is current account, it is 12.5 lakhs. If it is other than current account, it is 2.5 lakhs. So, these are the 2 limits that we need to understand. So, that also has to be reported. So, these are the transactions that has to be reported. Now, we need to understand what we know what are the transactions that needs to be reported. We need to understand who has to report what. So, that is what we are going to see. For example, let us take the first 6 transactions. whichever we saw earlier. So, this entire 6 transaction should be reported by bank, that is purchase of DD, payment of prepaid RBI, cash deposit, withdrawal of current accounts for other accounts, fresh deposits, credit card payment. So, that is how we are going to say. So, you probably can link this slide with that previous slides to understand whether a particular organization should report this or not. So, that is what we are calling here. So, bank has to report the first 6 and the 14th. The 14th is about demonetization. So, these has to be related. And then portfolio managers, they will have to report 4, 5 and 14. Nidhi should be reporting the 5th transaction loan. So, we will see what is that 5th transaction. It is about fresh deposits. So, any fresh time deposits more than 10 lakhs has to be reported by these people. And non-banking financial companies, they also have to report. And any let us say any company, so should report a certain transaction. The companies, that is let us say a domestic company, an Indian company should report these transactions, that is 7, 8, 9. What are those 7, 8, 9? It is about issuing debentures, issuing bonds, debentures, acquiring shares and buyback of shares, that is 7, 8, 9, 9. These 3 should be reported by a company which is actually in receipt of thing. And then for tax audit cases, you have this 13th clause where you say cash payment exceeding 2 lakhs has to be reported by such person. And a forex dealer has to report relevant transaction, mutual fund has to report relevant transaction, registrar has to report 12. So, what is 12? It is about purchase sale of any immovable property. So, registrar, a sub-registrar should report the details of the property beyond that limit. So, these are the information that will be filed by the respective persons. So, these persons, that is bank to registrar, will file a statement in form 61A. So, it is form 61A. In form 61A, these people will file the relevant transaction. What is the transaction covered under 1, 2, 3? So, these are the clauses. So, what are covered under SFT1, bank will report. What are covered under SFT2, bank will report. What is covered under SFT 789, a domestic company and company will report. And what is applicable for SFT 13 will be reported by tax audit assessee. So, these are the applicability. So, these assessee, these persons must file this form 61A in a year, once in a year. The due date is basically 31st May, that is within 60 days from the year end of that particular financial year, they will have to report this form 61A. So, what is the purpose? So, it is basically a system for income tax department to track what are all the transactions. Let us say transactions, we actually mean the major transactions, material transactions entered by a particular person. To track these, the reporting entities to whomever that person has contact. If he is depositing into HDFC Bank, HDFC Bank will report so and so person has deposited so much of money. So, similarly, accordingly for each of the type of category of people, will file this form 61A reporting this SFT 1 to 14 depending upon whether it is applicable to them or not. Now, this information whatever is being filed is one of the key source of input for income tax department. So, if you actually remember, probably in your articleship days or something, you would have gone through a statement called 26AS, right? So, what is 26AS? It is a consolidated statement which provides you, it is basically called as annual statement. It provides you a list of TDS available to you, TCS available to you, any advance taxes paid by you, any refunds paid by you, all this information is reported there, right, in 26As. This was kind of modified through a concept called annual information statement, through an information called annual information. So, this is actually applicable from only current year, this kind of concept. So, this annual information statement is discussed in 285BB read with rule 114I. So, what does it contain? As we said, similar to 26AS, your TDS and TCS detail will be there, and everything through 61A, that is through form 61A, whatever specified financial transactions are covered through the relevant party, bank, Nidhi, company and all those things, such information will also be reported. And then whatever taxes has been paid, that is any taxes, self-assessment taxes or something paid by the assessee, that will also get tracked. Whatever is a demand due, refund applicable in that particular thing. Any pending proceedings will also be covered. Any proceedings that is completed. All this information put together is only called as annual information statement. So all the 6 information, right from your TDS, your specified financial transaction, your payment of taxes, demand refund, pending proceedings, completed proceedings, all the 6 only together will be displayed through annual information statement, which will help the assessee to know how much they have possibly earned. When I say they will know, it is typically to understand whether they have missed out something or if the bank has reported something wrong. So this has to be in sync. What you think you have earned as income, what has actually been reported through this annual information statement. Only when this syncs, what happens is the return that you are filing will be appropriate, will have the right information. So this is what is about miscellaneous provisions. Now as far as this miscellaneous provision is concerned, as we said, we initially discussed about 4 sections, which is part of your profit and gains or business or profession. You also have this what you call 44AB, where for this tax audit what has to be done. So for this 44AB, you will have to disclose transaction relating to 269SS, ST and 269T. 269U, we said there is a portal where you will have to disclose that you are a company earning more than 50 crores of sales, turnover or gross receipts in IPI, that is immediately preceding previous year. So for if it's for previous year 22-23, we will have to see for previous year 21-22. So all this is what is being discussed through those 4 sections, that is 269SS, ST, SU and T. It is about receipt of certain loans, deposits or some. Then you have repayment of loans or deposits in 269 ST. So we said about the limits applicable, what is the section in which penalty is also covered. Then we also saw this specified financial transaction, whereby we are saying there are 14 SFTs. Each of the 14 SFTs, income tax department has very clearly provided which person, which authority has to file what information. Bank has to file what? 1 to 7 and 14th SFT. Similarly, what should a domestic company do? 7, 8, 9, which is relating to bond, debentures, equity shares and buyback of shares, all those things. So similarly, each of the type of entity has certain informations to be reported to the income tax department through form 61A, called as specified financial transactions. So this statement will help in estimating the income of the assessee to an extent. Apart from this, we also discussed this slide, we were discussing about annual information statement, which is the upgraded version of 26AS. In 26AS, what you see is actually only TDS and TCS. Here in this annual information statement, you will have this entire details of SFT transactions, whatever has been reported under your name. So if there is any dispute, there is also a process to raise a dispute and correct it accordingly. Apart from that, you have what are the taxes paid, what are the demand refunds due, and what are the pending proceedings and what are all the completed proceedings. So all this put together is only annual information statement under section 285BB, read with rule 114I. Now with this, we wind up this chapter of this miscellaneous provision. Before winding up this session as a whole, we will try to understand a bit of salaries. What is salary? We very clearly said salary is not going to be dealt in detail because it has been extensively covered in the intermediate, and moreover there is no weightage to it in the final examination. It's like almost nil, okay, so it has nothing to do with your final examination. But for a purpose of understanding, probably if you wanted to refresh what you have already learned in intermediate, you can always go through the chapter, you are most welcome. So we will have the basic understanding of this salaries alone. So this salary is about 3 sections, that is 15, 16 and 17. 15 is about 15 is a chargeable section. So what is a chargeable section? The section which says this income can be taxed. So that is what is chargeable section. So for salary it is 15, for business or profession it is 28, for capital gain it is 45. So there is always a charging section which tells through this section only you say that this income will be taxable under so and so head. So that is what is section 15 about. Section 15 includes whatever salary is due, whatever is paid as salary, whatever is the arrear salary, all this only put together is only salary chargeability under section 15. So 16 is about deductions and allowances. So you have standard deduction, which is 50,000 or the salary whichever is lower. You have entertainment allowance, which is only for government employees, and then you have professional tax. Whatever is paid, it usually roughly be around 2,500 to 3,000 rupees. Whatever is that payment is actually allowed as an deduction in section 16 while computing income from their salaries. And finally, when you say salary, it is divided into three components. So one is salary, two is perquisites, three in profit in lieu of salary. So now what is salary? It includes wages, bonus, incentive, anything related to your employment. It could be monthly or periodically. Incentive could be once in a year or once in a quarter. Your bonus could be once in a year. So you could have certain schedules for the salary and other things. Perquisite also, you have various perquisites. You have providing a car, providing a accommodation, providing education, medical facilities. So there are so many things, right? So all this is actually covered under the concept of perquisite. And then you have profit in lieu of salary. Profit in lieu of salary is like, actually if it had it would have been given as salary, if not have been giving it now. It could be relating to your certain leave encashments or gratuity, whatever is basically which will take the characteristics of salary. So that is profits in lieu of salary. So that's another section that we are talking about. So that is what is taxable as salary. Now if you actually look at it, this entire thing is divided into multiple sections. So first thing you have is what you will be computing. So when you say you are computing, you will be computing as whatever is your salary. You will compute perquisites, and then you will have profits in lieu of salary. Profits in lieu of salary. So these three things will actually provide you the income from salary, right? Or we'll say it's salary. From this you reduce less standard deduction under section 16, and then if there is any entertainment allowance or professional tax. So all this is reduced, and then you have your net salary, right? While computing this net salary, there is so much that you will actually be discussing. Probably we'll first talk about allowances, where in allowances you say that what are eligible allowances. You have HRA, you have LTA, you have conveyance allowance, you have so many allowances, dearness allowance and other things, right? So all these things are categorized to allowance. We also understand how much is exempt. If you actually could recollect your intermediate, when it comes to HRA, what is eligible as deduction? It is least of the following: 50% of basic salary in case of rent, and then you have rent paid minus 10% of salary, then actual HRA, whichever is least is actually claimed as an HRA. LTA, it depends on the shortest distance to travel to a particular location in either in the economy fare of an flight or this third AC fare. So these fare is actually allowed as LTA allowance. So you can claim twice in 4 years, right? So in a block of 4 years, you can claim it in 2 years. So all these things. So depending upon the requirement, there are various allowances. So all this has to be factored. Needs to be found out how much is actually taxable. So section 10 will provide various exemption to these allowances. To this extent, it is not taxable. Basically, when you say allowance, it could be fully taxable. There could be certain allowances which are fully taxable, and then you could have fully exempt. So whatever we are talking, the entire proportion is exempt, and then you have partly taxable, which means partly exempt. So HRA is concept where it is partly taxable, partly exempt. Sometimes it could be fully exempt also, you never know. Whatever you have actually collected at HRA, the entire thing could also be allowed. So depending upon the nature, depending upon the situation, the allowance could fall in one of these three buckets, and that is how you actually treat it. So that is as far as allowance is concerned. Similarly for perquisite, you have valuation. How do you actually determine a perquisite? For example, car, depending upon the cubic capacity, 1.6 liters or more, 1.6 liters or less, depending upon the usage, it is fully for personal, fully for business, partly for personal, partly for business. How do you do it? If a chauffeur is provided, how do you do it? Valuation. And similarly, you have, let's say, as car, you also have this guest house accommodation, that is housing accommodation. Depending upon the population, a percentage of basic salary is considered as your perquisite. So all this is what is discussed in your your valuation thing. So how is perquisite valued as far as your perquisite goes? So how much is taxable is based on the valuation methodology that is provided in so let's say Rule 3. Rule 3 provides a detailed valuation for various perquisites. Apart from that, you also have the respective chapter which will discuss about how to value various things. So out of all this, you also have certain deductions, right? That is section 16. So we said standard deduction. So when you say standard deduction, it is 50,000 or your salary, whichever is less. So you will either have your 50,000 or salary, whichever is lower will be considered as your exemption. So that will be a deduction eligible for your salary portion. So these are the things that is basically discussed in salary, which tells you how to compute allowance, how much is taxable, how much is not taxable, and what are all profit in lieu of salary. I forgot to tell you about this profit in lieu of salary. So let's say you have gratuity. How do you calculate exemption of gratuity? You have this leave encashment. So how do you calculate? It is basically the 15 days salary for the service period that you have been doing. So that is how you calculate for the gratuity. Leave encashment also, you have the workings in which you are eligible to claim partial exemption from these deductions. So this is what is also calculated. So profits in lieu of salary, like your gratuity, leave encashment, based on the calculation you compute how much is taxable, how much is exempt, and then accordingly work. Only after doing all this, you will be able to arrive at this working where you identify how much salary is taxable, how much perquisite is taxable, how much profit in lieu of salary is taxable. So what is your total salary? In that you claim standard deduction under section 16, and you also claim professional tax and entertainment allowance for in case of government employees. So after all that, you finally get this net income from salary. That is what will be accounted for in your ITR. So whatever is being treated as income from salary is what you will be paying tax on it. So that's what it is about. So with this, we wind up these provisions of salaries and miscellaneous provisions. So thank you for the wonderful session.